How does insurance work for self-driving cars? First, I believe we are so far from individuals owning truly self-driving cars that it is very hard to tell. And transitioning to that, if we ever get there, will be incremental, and in the process we will get more clarity on how it will play out. In terms of who is responsible, that's easy, the operator. Even in a full driverless car, someone has to program the route and assign the task. They are the operator and responsible for what happens. Keep in mind that in the near term, we are more likely to see driverless cars in terms of fancy cruise controls, in which case the driver is still operating the vehicle and is fully responsible, just like now. I can actually see a situation where having such a vehicle would command higher premiums due to the possibility of people falling asleep or misusing the technology. Human factors engineers have spent a lot of effort trying to find ways to keep train operators from falling asleep while operating highly automated trains. Side story, a friend of mine who did research on the subject described a research study on fatigued train operators and a system that utilized an alarm. The operator would have to periodically reset the alarm as a means of keeping them awake. He told me that during the study, individuals would fall asleep and manage to wake up enough to reset the timer, then go back to sleep. I can easily see similar situations in cars that have smart cruise controls that can effectively drive for you on a highway. Now, if we ever get to having truly driverless cars, the type that don't even have a steering wheel, NHTSA's Level 4 Automation, U.S. Department of Transportation releases policy on automated vehicle development, then I can see the situation where the safety record of a given vehicle will come in the equation. I don't see software metrics being relevant. The insurance companies look at outcomes, not root causes, so they will initially set very high rates, and as data becomes available, competitiveness will force them to adjust. And yes, in that case, if we ever get there, there may be some equalization of premiums, although there will still be factors such miles driven, conditions under which miles are driven, and so forth. To most people, self-driving cars, 1, sound like a dream. Hands-free driving offers us extra free time, relaxing commutes, and a sharp reduction in vehicle accidents. While no one would disagree that these are enticing promises, the insurance industry isn't excited about self-driving cars. They're worried. Insurance companies are scrambling to prepare for a world where humans don't cause car accidents. Most experts think self-driving cars will be dominating the roads by 2030. That leaves insurance companies with a small window of time to change the way we all think about car insurance. Here are the areas where we'll probably see the most change. Liability: if a car accident occurs, but a person isn't driving the vehicle, who's at fault? That's the question insurance companies are asking, and the prevailing answer is worrying. It seems likely that people will blame manufacturers, who logically should be held accountable for their product malfunctioning. However, this creates a serious problem. If manufacturers are being held liable for every single vehicle they produce, that severely increases their chances of being sued. Lawsuits cost money. So, under these conditions, manufacturers might shy away from making self-driving cars to avoid going out of business. To fix this, the Rand Corporation has suggested a no-fault system. This system would allow accident victims to be compensated without manufacturers seeing consequences that might discourage them from continuing to produce the offending product. Regulation: in the United States, insurance is state-regulated. That means different jurisdictions throughout the country have their own set of rules and regulations governing car insurance and self-driving cars. This once again hits car manufacturers with a new responsibility. Should manufacturers be expected to pay the price of keeping up with the laws of 51 jurisdictions? Probably not. That's why they're trying to get the federal government more involved in car insurance. If car insurance becomes federally regulated, everyone involved will only have to answer to one set of rules. Underwriting: underwriting is the process that determines the terms by which an individual receives insurance, or whether they receive it at all. Self-driving cars will reshape or remove many traditional underwriting criteria. Underwriters usually focus on drivers. They ask questions about a driver's number of accidents, how many miles the driver expects to travel, and where the driver will keep the car. While those questions will still be relevant, the much more important questions surround the model of the car. The safety of a self-driving cars rests primarily with the technology within the car. Rather than assessing drivers, underwriters will have to assess the technology. Repair costs. Self-driving cars contain complex technology that trumps the technology in most modern cars. This will likely increase the cost to repair damaged parts. Since insurance companies will often be held responsible for this cost, it's an important and possibly frustrating factor for them to consider.